Welcome to Investors Insights. Our topic today is emotional markets. Last Friday was very eventful, wasn't dull and volatile, and full of emotion. We're going to address that today, and we hope you had a great weekend for Thanksgiving celebration. And with that, as we go into the month of December, I am joined by my distinguished colleagues, Bobby Norman, Adam Van Zant, and Ty Miller. And each of them brought to the table today some really good insight in relation to Friday and also trying to look out into the month of December. So, Bobby, I would like to start off with you, if you're okay with that, mainly because I thought you gave a great summary of what took place this past Friday.
Yeah, Greg, we want to address the market pullback on Fridays. The market had one of its worst days of the year due to the concerns of the new variant. And we're obviously not doctors, so we will keep it market related. But one thing to point out is that Friday's post-Thanksgiving environment is always lightly traded and therefore much more susceptible to big price swings up or down on any headline. In fact, the NASDAQ saw its lowest volume of the year on Black Friday with only 3.4 billion shares being traded. That's well below the average this year of 5.1 billion shares being traded daily. So it wasn't surprising that the market had a big sell-off from the variant news based on the volume because there were very few buyers in the market on Friday. It's also important that over the weekend, market futures were positive. So it's very likely we'll see buyers come in and take advantage of the pullback. But here's the point. Just like we did in March of last year when COVID caused a big correction, we are trusting our technical, our fundamental, and our momentum indicators as news of the new variant hits the headlines. And so our indicators, they take the emotion out of the market. And the reality is this isn't the first or the last variant of COVID that the market will have to deal with. So there's still a lot to like in the market. Corporate earnings are still very strong. Rates are still historically low. And numerous parts of the economy, like manufacturing, are at highs. So we're watching everything carefully here, but keeping eyes on the indicators.
Yeah, Bobby, I totally agree with you. And if people go back to our previous vlogs, they will see we've talked about the facts in relation to the emotions. And Friday was a good emotional day. And with that, Adam, Bobby mentioned our technical indicators, our fundamentals, what we watch closely. You've done a great job on the technical side. Tell people where we are now in relation to what happened on Friday and what we're looking as support levels and resistant levels.
Definitely, Greg, and you and Bobby touched on it. So even though we had a short day Friday, very volatile. So we closed the week up with the S&P 500 sitting at 4,594 with a resistance level of 4,630 and a new support level of 4,570. It's also important to keep in mind that our 50-day moving average is currently sitting at 4,527. So back to Bobby's point too, it's important not to make these knee-jerk reactions in moments like these, because even though we saw a very big day on Friday with the markets going down, we saw that 50-day moving average still push up. So that's creating a base for us heading into the end of the year. It's something to keep an eye on from a technical level.
Very, very much so. There are times you can take advantage of the emotions in the market, and we're going to be watching that very closely. And that said, if we've got a lot of great things going on behind the scenes, Ty, you talked about the big topic now going into December. Friday was Black Friday, and today is Cyber Monday. Talk about that in relation to the consumer and retail sales.
Yeah, so as you mentioned, the holiday season's finally upon us. So what better time to talk about retail? Black Friday, as you mentioned, was this past Friday. Early indications showed that foot traffic in store was up 47.5%.
That's great.
Easing COVID fears, at least until this new Omicron variant and these supply chain issues are likely the biggest factors for that. One interesting shift, according to the National Federation, they did a survey. 46% of their respondents have started shopping earlier this year than usual.
Okay.
And the survey also showed that 28% of consumers had actually completed their entire holiday shopping by early November this year.
Wow.
I think the supply chain had a lot to do with that. People are scared that, they won't be able to get gifts in time for Christmas, but also Black Friday deals aren't just Black Friday anymore. They've been going on the entire month. So, with that being said, as you mentioned, today's Cyber Monday. So happy shopping.
Yeah, and you're absolutely right about that. We may be seeing a change in some of the buying habits of consumers more and more. We've talked about the cyber purchases that are taking place versus people waiting to go in the store. So we'll watch that very closely, but I think it's a good indicator, and it looks like the consumer is definitely out there, which drives up earnings and markets and shows consumer confidence. So we hope you have a great week as we enter the month of December, the last month of 2021, and start to look into 2022. We're going to be keeping you updated. We will be on Facebook, Twitter, LinkedIn, our podcast. We want you to be fully aware of what's taking place as we keep you updated, and also not only through our vlogs, but one-on-one in relation to your financial blueprint and what's taking place in the markets. We thank you very much for watching this vlog, and we also appreciate those you share it with. Have a great week, and we'll stay in touch. Thanks.